Welcome to another YouTube video. In today's video, I'm going to be going over the only trading strategy you possibly need in 2025. This strategy is genuinely one of the easiest and most effective models that there is right now. So over the course of this video, I'm going to be breaking down exactly how you can use this model for yourself and also give you a couple of trade examples so you can see it in live action. If you are looking to learn this model or get taught one-to-one by myself, I have got a trading Discord in the description below. As well as that, I've got an 80% discount code which is down there at the bottom for Apex Trader funding. And also in the description is a discount code to these funded plaques. They look unbelievable. So if you do want to get yourself one of these, then there's also a discount code in the description. Without further ado, let's get straight on with this video and teach you this trading strategy. So the model we're going to be using is the inversion fair value gap model, and I'm going to be breaking it down so it's so simple and easy to understand that you can then go on to back test and forward test this exact strategy. So the first thing when using this model is you want to identify areas of liquidity. Now if you don't know what liquidity is, I have got a liquidity video that explains exactly what liquidity means. So go and watch that, it is on one of my playlists. But if not, if you do understand what liquidity is, then just essentially mark out your highs and your lows that could now be targeted if we were to enter a trade. So here you can see I've marked out the high and the low of this range, and price is just in between. So if we're going to be taking longs, then we're going to be targeting this external high, and if we're looking for short, then we're going to be targeting this external low. Now that you've marked out your high and your low of your range, simply wait for a liquidity sweep in your chosen direction. So the way you're going to choose your bias here is just by looking at what trend price is actually in. So you can see on NASDAQ here, we are creating higher highs and higher lows, so we are going to be looking for longs here. Also in this trade, we've got trendline liquidity to the left, which is also a good draw on liquidity, so I'll mark that out as well as another external target. So now that we've established we're in an uptrend, simply wait for a liquidity sweep. So of course, if you're looking for a long, you're going to have to wait for a sell side sweep. So we want to see price come down and take out an area of sell side liquidity before then looking for a move back up to our chosen target. So you'll see when I play price through, we do actually come down and sweep this level of sell side liquidity. Now this becomes a liquidity sweep, and this is where we move on to the second step of the model. So what you want to look for when trading this model is price to actually tap into a higher time frame fair value gap. So what that means is you need to go to a different time frame other than the 1 minute and look for any higher time frame gaps. So you can see here that we've got a singular bullish 5 minute gap, okay, that price has just tapped in and bounced out of. So we're clearly respecting this bullish fair value gap, okay, and if we're looking for longs and we're looking for buys, that is what you want to see from price action. Now go back down to your chosen time frame, so I use the 1 minute time frame, and this is where you want to mark out any clear and obvious fair value gaps that are on the screen. So here you can see we've got a singular 1 minute bearish gap. Simply mark that out, and that is the second step of the model. So you've identified your bearish fair value gap, and you've also identified where we're delivering from on the higher time frame. Now simply the third and final step at this model is you want to see displacement break through this fair value gap. So what that means is you want to see big bullish momentum break through this singular bearish gap. And as you can see now, we have clearly come up and inversed this bearish fair value gap. So this is now where I enter a long position, and you simply target your chosen liquidity level. So this is going to be this external high, and you can also leave runners to this high over here, which we marked out previously. Your stop loss will be if a candle closes back below this fair value gap. If you do want to set a hard stop loss, then just set it below the swing point. It does dramatically reduce your risk to reward, but it does give you a lot more wiggle room if price wants to come down and retest. And then simply just watch price play out, and you can see how well this model works. We clearly respect the inversion and we shoot straight up to our TP. Now that is 102 points there with hardly any drawdown whatsoever. We went into 7 points drawdown there and we caught over 100 points. So I'm going to show you another trade example now of where this model works perfectly. We'll go back to the criteria. So first thing we do is identify our bias. You can clearly see that we are still bullish, so we're going to be looking for longs, okay? It's that simple. So this is now where I would mark out my levels of sell side liquidity that I would like to be taken. Okay, so you can clearly see I've marked out these three levels now of sell side liquidity. Now if any of these get swept and our entry model presents, that's when we can look to take long positions. Of course, we need a target, and you can see we've got this nice swing high that we can target above. So simply, we've got our two targets marked out, which are these two levels, and then we've got our three levels of sell side liquidity that we want to be swept. So now, again, all we wait for is a liquidity sweep to the downside, because we're looking for long positions. And as you can see, we have just taken out both of these levels. So we've taken out this level of sell side, and we've also swept this low down here. So that is two liquidity sweeps and we have now created a singular bearish fair value gap, as you can see right there. Now again, this is where we look to a higher time frame. Are we delivering out of any other higher time frame gaps? So you can see I'm just flicking through different time frames here to see if we're respecting any gaps. And as you can see to the left, we are actually inside of a bullish 5-minute gap. And you can see price has clearly wicked back out and is respecting it. So now that you've established we are delivering from a higher time frame gap, we've also swept sell side liquidity and you've got a clear and obvious bearish gap. Again, all we wait for is this bearish gap to be inversed with displacement. Here we finally close back through this bearish gap. So this is again where I enter a long position. You can simply target the liquidity level you've chosen. Your stop loss goes back below the inversion fair value gap, but you can see we took 48 points profit there, which is more than enough for the day, and it's another great trade. So that's 2 individual trade examples of this trading model. Now I'm just going to break down the criteria for you so you can actually use this as kind of your trading plan / checklist. So the first step of the model is identify your daily bias. Once you've identified your daily bias, that's when you can move on to the second step, which is going to be wait for a sweep. So you want to see a clear and obvious sweep of liquidity in the opposite direction. Once you've got your sweep of liquidity, that's where you want to see a clear and obvious gap left behind. So the fourth and final step is displacement that inverses that bearish gap or bullish gap that we left behind. Now this is simply one of the easiest trading models you can possibly use right now, and I use it every single day inside of my trading Discord. If you do have any questions, then make sure to leave a comment in the comment section below or join my free trading Discord in the description. I'm active in there 24/7 so you can ask me questions. That's going to be it for today's video. Thank you very much for watching. Please like the video, subscribe to my channel so you can watch more of these trading strategies. And yeah, I'll see you on the next video, man.